Hey everybody, welcome to Mortgage Today for Tuesday, November 7th, 2023, and what a day it was. UMBS were up 8 basis points in the morning, bright and early. Bonds recovered some of yesterday's losses in the overnight session as European markets leading the way on much weaker economic data. The U.S. trade deficit widened by more than expected in September, reflecting the resilience of American demand for foreign goods. The shortfall in goods and services trade expanded 4.9% from the prior month to $61.5 billion. According to data from the Commerce Department showed Tuesday, the figures weren't adjusted for inflation though. The value of imports is up 2.7% while exports increased 2.2%. We also got comments from Neel, Kashkari, who isn't convinced rate hikes are over. Under tightening will not get us back to 2% in a reasonable amount of time, the president of the Minneapolis Federal Reserve Bank said in an interview with the Wall Street Journal on Monday. He is awaiting further data, although Chicago Fed President Austan Goolsbee thinks we could be on a golden path of lowering inflation without causing a recession. We also got data that mortgage delinquencies picked up in September. According to Black Knight, the DQ rate increased to 3.29%, which was up 12 basis points from August and 13 basis points from a year ago. This was the largest increase in the past 2.5 years, though it is still a fairly low number. 30-day DQs rose by 5.1%, making the fourth consecutive monthly rise, while 60-day DQs have risen for 6 months in a row. Every now and then, European markets do favors for the U.S. bond market narrative. They can also detract, but today was not one of those days. Weaker overseas economic data led to overnight gains in the European bonds. Those gains spilled over into the U.S. session and largely account for the moderate rally seen on Tuesday. With that, the present week looks super sideways, coming off last week's rally as opposed to looking corrective, something that we may have worried about yesterday. Hurdles remain in the form of Treasury auction cycle. Today's 3-year auction was somewhat relevant, but the 10-year and 30-year tenors are more consequential over the next 2 days. UMBS closed the day down 17 basis points at 100.67. Ginny's fared a little bit better than that, but at 100.67, that puts us right in the middle of this range, which is bordered by a Fibonacci and the 50-day moving average down about 100.298. And then we have a convergence of the 100-day moving average and another Fibonacci up at 101.043. In other broader economic news, WeWork, which is a co-working space once valued at $47 billion at its peak, has filed for Chapter 11 bankruptcy, and they have halted shares in advance of that. We also got news that the Israeli military said yesterday its forces had completed encircling Gaza City after an overnight barrage of airstrikes, cutting off the populous city center from the rest of the Gaza Strip and effectively dividing the enclave into north and south regions. We also got Rocket reported third quarter earnings and beat expectations. Closed loan volume fell 13% year over year to $22.2 billion. Gain on sale margins increased by 10 basis points to 2.97. Rocket is guiding for a seasonal slowdown in the fourth quarter, which is to be expected. We also got a post from our sponsor at thatmakesense.com. This is the third in our audio session about the book The Slight Edge, which is a tremendous book. If you have goals and you want to accomplish them and you don't know where to start, The Slight Edge is the place to do it. So come check it out at thatmakesense.com.